Okay, we have continuing on with cash flows. We're going to look at investing and financing sections here. And what we've got an income statement and a balance sheet, comparative balance sheet. And we want to compute the acquisition of plant assets during 2018. Business sold no plant assets during the year, and we're going to assume the company paid cash for the acquisition of plant assets. So, when we're looking at this, and this is part of our investing here, this is long-term assets that we're dealing with. So, for number one, a T account is a real helpful thing to use here. So I'm going to do a T account for plant assets. And basically, if we look at our comparative balance sheet, we can see at the end of the last period, 2017, we had $84,350 worth of plant assets. At the end of 2018, and let's put this in here, we had $84,350 being an asset. It carries a normal balance on the debit. So we end the year with $105,350. And given that we sold no plant assets and we paid cash for these plant assets, this is going to affect our cash flow. So we need to know, how much cash did we pay for plant assets for the year? Well, if we take the difference of what we have here, 105,350 minus our 84,350, we get 21,000. That is essentially what we paid cash-wise for plant assets for the year. So in investing, cash received from investing activities for the year, we'd see a cash outflow of $21,000. Now, number two says to compute the payment of a long-term note payable. Well, we're talking note payable. This will be financing. During the year, the business issued a $4,400 note payable. So we're going to do another T account. We'll have this as notes payable. And if we look, let's see, here on our balance sheet, our comparative balance sheet, we can see we start with a $12,000 balance in notes payable. We end with a $9,000 balance, so that'll be down here. And let's see, we issued a $4,400 note payable. So we issued a $4,400 note payable. So if we look at this, we have note payable being a liability, has a normal balance on the credit. So we can see we started with 12,000, we added 4,400, so that's 16,400, but we're left with 9,000. So if we take the difference, 12,000 plus 4,400 is 16,400. We subtract what our ending balance is, the 9,000, we will get our payment on the note payable of $7,400. And as I said, the way we get that, we have our 12,000 plus our 4,400 is 16,400. Our ending amount here is 9,000. So simple math. 7,400 must be the amount that we paid on notes payable for the year. So when we look at cash flows from investing activities in this case, what we'll see is we had a cash outflow of $7,400, missing amount here for notes payable. So investing and financing aren't that difficult. We just have to do a little detective work for them. But again, this is a little introductory. We'll have some more later on, more intricate forms of cash flows. So again, practice your accounting. Bye.